All right, we're live. Hey there, I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is my live stream. We talk about the stock market, we talk about investing, we talk about personal finance, we talk about money. We put it together so that you could potentially become your best financial version of yourself because you're worth it. I like that because you're worth it. So let's talk about the market today. Let's talk about the economy, where we're going. A lot of conflicting signals. There are people who are saying the economy is going to a hard landing, soft landing. Bitcoin could go to $250,000 from where it is now, about 16,000. Bitcoin could go to $5,000 from where it is now. This is what creates a market. It's all about the conflict, the different opinions. And I was speaking to a friend of mine, and I said, we all have to go through this back and forth with good news, bad news, the economy, the stock market, your own personal finance. But if enough time goes by, you'll realize you were really just best off sticking with a properly built portfolio based on your own needs, your own game, your own plans, and that's what works. And all the other stuff is just a lot of worry over nothing. But if I can keep you from making hasty mistakes along your financial journey, then as far as I'm concerned, I've done the greatest job as a financial advisor in the world. I really mean that. Let's roll the intro. We're going to talk about a couple of things today and then make it a nice, quick show. Market starts the week on a down note. Doesn't mean the rest of the year is over. It just means that the Fed pause is on pause for now. Here we go. Thanks so much for joining me. We're just getting started. I'm Mitch Goldberg. While you're watching this, whether if it's in the live stream or in the replay, if you would be so kind, leave me a thumbs up. Let me know you're out there. Give us an applause, a wow, depending on whatever social media reaction is available to you, depending on which platform you're watching on. We stream to all of these platforms right here. You see those? And then we post our snippet videos, 30-second to 2-minute outtakes of an important point that we make here, amongst other things. So I post a lot of content. I hope you'll follow me along my content journey because it's all educational. It's all about you. It's all about helping you, the viewer, become better with your money. My name is Mitch. If you have any financial related questions, investment, personal finance, please ask me in the comments below. The name of my firm is Client First Strategy. I am here to help you. And sometimes some of you will become a client of mine along the way. And that's always something that I think is important to explore to see if you and I are actually a good fit. Doesn't always work that way, but when it does, it's wonderful. When it doesn't, we'll still be friends. So if you are in the market for a new financial advisor, look no further. I'm right here, and let's talk about that and see if we're a good fit. So let's first go through a couple of important points today before we go through the entire rundown on how everything in the stock market did today. Okay, just getting some screens ready while I'm talking to you. What happened today is that the ISM Institute for Supply Management figures came out today. Manufacturing is a little better, a lot better than expected. So we keep looking for this slowdown from higher rates, from the actions that the Federal Reserve, the central bank of the United States, has taken to raise rates, make borrowing more expensive in order to slow down the economy. And, there's a lot of evidence that it is working. There's a lot of prices and commodities and lots of service. No, I wouldn't say services, but lots of goods. Prices are coming down. I know what you're saying, Mitch. There's inflation everywhere. What do you see coming down? Your lumber, copper, prices of commodities that are used to actually make things are starting to come down. Um, Other things are going to be sticky. Things like legal fees, whatever. Certain things. I'm not picking on lawyers. well, a little bit, but certain things will go down in price. Some things could go lower than before, than before the pandemic started. The cost of computing power is getting cheaper and cheaper and cheaper. And I know people say, "Holy smokes!" About $1,000 for a decent iPhone, right? So price of an iPhone has gone up from 4, 5, 600 bucks when they first came out over 10 years ago to 1,000 now. Yeah, this top of the line iPhone I think is 1,400, but I didn't get the top of the line. I got the iPhone, just the 14. It's all I need. And the best feature about this phone, by the way, is the battery. That's really, before that, I had a 10R for 4 years. Before that, I had an iPhone 6 for 4 years. I typically keep my phones for about 4 years. It's my thing. And then I get a new one. And I want to squeeze out every bit of electron juice you can get out of the phone. Having said that, very important, the price of the phone has gone up. Look, let's say double since they've come out. I don't think it's even double, by the way. You just think it's more because you're not getting these great deals anymore from the cell phone companies like you used to get, over 10 years ago. But the computing power has probably gone up by 20 times. All right. You can get phones now, they regularly come with 256 gigs of memory, 128 to 256 gigs of memory, as opposed to 8 gigs of memory for the original iPhone. So you're getting much more computing power for the money in that regard, and everything's technology. You have to take a look at that also in terms of inflation and a couple of other things that are going to be taken a look at. These will start to show up in the numbers, but right now you see the cost of milk, the cost of eggs, the cost of a car. Things are up. I get it. But we will start to see things mitigate. Car dealerships are starting to offer better deals again. Sales are up, and everything that you want is available in the stores today. There's no shortage of anything. So a lot of bottlenecks have cleared up, and that should help put the pressure on inflation, drive it down a little bit lower. Having said that, we go back and forth with, is the Fed going to pause? So the Fed's raising rates, and then when it stops raising rates, we call it the pause. And when it starts to lower rates, we call it the pivot. So where are we now? Well, we want to be at the pause. But every time we get excited that this is it, the pause is here, the economy's starting to slow down and we're seeing evidence in the big statistics, it doesn't happen. We're like, oh, damn, I have to wait another month or two. And the market goes down on those. And we're just in that perpetual, Lucy pulling the football away from Charlie Brown every time he wants to kick a field goal, right? Every time she pulls the ball, you know what I mean, right? You've seen that. I really should make a little video of that and play it on my stream. Kind of like, when I play my little videos like this. You see? Okay. So that's what's going on. We keep going back and forth. So depending on the numbers, we get a bit of what looks like the beginning of a slowdown in the economy. Interest rates go down. The Fed said it could be on pause, but we need, I think Lucy has pulled the football away from us so many times. We've gotten so excited so many times about seeing the economy slow down, which would then mean we could expect inflation to go down and interest rates to moderate or at least stop going up, and maybe even go down on long-term rates. We've gotten so excited for it, and then the football gets pulled away. And it's happened so many times that I'm hoping investors are finally just, sick of that. And they're not expecting inflation to come down, because that's when it's going to be a real impact. When inflation numbers finally do start to come down, that's when you're going to really see a rally in the market that is not just bounces off of lows, but pretty sustainable to make new highs. That's the play we're looking for. Now, if I could tell you when, I would tell you when. I would tell you I don't know when. And every time we think we know as an industry when it's going to happen, Lucy pulls a football away, and we screw it up again. So my point to you is, make sure you're in a portfolio of investments that's right for you. What else can you do? You're going to listen to someone on TV today who said, oh, we're going to have a year-end surge, and then the market's going to tank in the beginning of next year. Then we're going to go back up again. And that's a pretty specific call. Maybe it'll happen, maybe it won't. One hedge fund manager said Bitcoin should go up to $250,000 a coin next year. It's 16,000 now. Another one says it goes to 5,000. I mean, you're getting. I mean, if I want to be, and I look, you know this, I'm quoted a lot in the major media, but if I want to get quoted like all the time, I just have to make outlandish, or totally extreme market calls, and I'll be on all the time. I'll come and say I think the Dow's going to hit 50,000 by the end of next year, and I'll give you like 10 reasons why I think it'll happen, and it'll get picked up. I'm telling you, somebody in the media will pick that up and say, money manager, financial advisor, whatever says Dow 50,000 next year. And I could write that story and I could come up with the reasons why I think so and take a look at all the individual stocks in the Dow and give you a reason why they could all go up a lot. And then put the numbers together and say, if you do the math, that's Dow 40,000. I mean, 50,000. That's not the game I want to play. I want to play, I want to help you play your game. And that's why we focus on personal finance, get your spending under control, do things that could raise your earnings. Believe it or not, I work with clients all the time and helping them do things that could actually raise their earnings. I advise clients on things like that. It's not just a matter of handing over your money, I'll invest it, I'll get to know your goals, your needs, your risk tolerance, and we'll invest it accordingly. That's a big part of what I do. But a lot of it is also helping people get into a better money mindset, a better frame of mind. It's a lot of it is about helping people take steps to become more valuable in the workforce. People are worried about layoffs. What do you do when you're worried about a layoff? Go home and worry about being laid off? Don't go out to dinner for the next 3 months? What do you do? How about this? Take some courses on LinkedIn Learning. Get a new certificate in something, okay? Demonstrate to your current employer and a future employer that you're not just sitting by waiting to get fired and then apply for a new job. Make yourself more valuable. You want to get paid more? Make yourself more valuable. You want to hold on to your job? Make yourself valuable. You want to find a new job? Make yourself valuable. You get my point, right? And then networking. Are you networking? Or are you one of those people who says, I know a lot of people, but I'll start networking if I have to, or if I get fired, if I get laid off. That's not the time to network. The time to network is when things are good, right? When you have your job and you're secure and you can actually take the time to network and get to know people, not when you're at the mercy of others' good graces and you have to ask people for help. Because once you're in the point of asking people for help, you can't help others because you need help. But when you're networking and things are good, you're helping other people. And don't worry about if you help someone, is that person going to help you? I help people all the time. And then people help me all the time. It's not the same people who I help who help me. It's different. We just pay it forward, and then somebody else pays forward their good fortune. That's the way the world works. And people wait until they're fired, laid off, until they're worried about a layoff. Can you imagine going to a networking event totally worried that you're going to get fired any day now? It would show in your face the stress, the sadness, the misery, and no one's going to want to, really deal with you and talk to you. You come off needy. It's not a good look for you. Okay, so start networking now. If you're worried about your job or your career, you should network regardless if you're worried or not. Okay, that's my thing. All right. So let me make my other screen here a little bigger so we could see the screens. All right. Let's get to stock market first. Let's do this. Hold on, guys. Hold on. All right, here I am. All right, so the Dow down 482 points. Let's call it 500 points. It was down a little bit more than 500 earlier in the day. No real bounce back. NASDAQ down almost 2%. S&P down almost 2 points. 2% rather. And why? Because interest rates went up a little bit and the high interest rate or high duration stocks went down a little bit. I'll tell you what that means in a minute. I want to show you a little something I'm going to draw for you, okay? Let's take a look at gold, down $28. Gold has been picking up, though. It's almost, it was 1,800. So gold has been showing a little bit of strength. Oil came down today. Oil stocks went in the tank today. No pun intended. And let's see, the VIX. The VIX is up a little bit, but about 20. Some experts agree that if we see the VIX get back up to about 30, 28, 30, the market will come down, but that'll set us up for a new leg higher. Let's take a look at bonds. This is more important today than the stock market, but the Treasury yields went up a little bit. I see a 4-month here up 4.5 to 4.5%. The 3 months still well over 4%. So for 3 months, you get 4.25, 4.28%. Now I want you to understand you're not putting $100,000 into a 90-day T-bill 3 months, and you're going to walk away with $104,286. It's 4.2.8% at an annualized rate. So in simple terms, it's like 1.25% every 3 months. All right, that's really what it's like. So these are annualized rates. All right, so don't expect that you're going to get that every quarter, because if you put $100,000 into a 3-month T-bill and you got $4,289, okay, then you would get $1,600, $1,700. Okay, that would be a lot more. It's $1,000 rather, I should say, $16,000, $18,000. So that's like a 16, 17% deal. That's not quite the same, right? So these are annualized figures, and I think people go into these not realizing what that is. But once you get past like the 3-year, you're right back into the 4 years again. I mean, you're right back into the 3.7, 3.5% interest rates again. So the 30-year is only, for 30 years, 3.5%, okay? And the 1 year is 4.7%. That is a huge difference. I mean, it should be the other way around, but that is just major to see short-term yields so much higher than long-term yields. So the expectation is that inflation will be lower in the years ahead. The economy will slow down in the years ahead. Technology will continue to keep inflation lower in the years ahead. And what we're seeing now is just a bulge going through the snake. And once it's out, the inflation scare is over and we get back to like a normal time of low inflation. All right. Crypto. So Bitcoin still close to $1,700 off $125. But I have to say, in my own opinion, over the last 3-4 weeks, with everything going on with FTX, that's the crypto brokerage / bank that went under and brought others down with it. Bitcoin is itself, I'll just say Bitcoin instead of the whole market of crypto, but Bitcoin has been holding up around 16,000, high 15,000 is on the low end. And you know what? I could make the case that it'll go lower, but it hasn't. So not to say you should run out and buy Bitcoin. This is not an endorsement of it. I'm just observing that it hasn't traded lower. It's been hanging around 16,000. People ask me personally, Mitch, are you a believer in Bitcoin? No. I'm not a believer in crypto. It's my own opinion, okay? I don't think it's real money. I think if enough people think it's worth something, then it's worth something. It's like a comic book. If enough people think a comic book is worth something or a stamp, then it's worth it. And scarcity, desire, collectibles, that has a lot to do with it. Bitcoin said, Bitcoin has scarcity because only something like 20 million coins could be, or 21 million coins could be mined. I don't know if that's enough of a reason to believe in it. But I know diehards who believe in crypto so much. It's like they live, eat, and breathe crypto. It's all they could talk about. You have to make up your own mind. My own opinion is I believe in money, the greenback, the dollar, and things I could buy with the dollar, and I get paid in the greenback in dollars. I don't want to. I'm not taking my shot and moving everything to crypto. Okay. One good reason to use Bitcoin is this: when you swipe your credit card, your Visa, MasterCard, it's about 2% cost to the retailer. With crypto, doesn't cost anything. You get rid of that 2%. But is it, is crypto stable enough? Because even some of the stable coins went to zero because it turns out they didn't have nearly enough collateral behind them to back up their stable price to the dollar. So it's a very tricky market, and I'm just not a huge believer in it. So those are some of the things we talk about. Let's see who's out there. I get the same weird people out there in comments because it's public, the show, and I don't put them on the screen for you because it's not really worth it, and there's no entertainment value for it. So that's what we talked about today. So now I want to talk to you about something else. Let's talk about stocks, okay? Let me get nice and comfortable here. Let me talk about stocks, all right? And I piss myself off every time I violate this little rule, all right? I get asked all the time, should I buy this stock? Should I buy that stock? What do you think of Tesla? What do you think of JP Morgan? What do you think of Exxon? What do you think of Honeywell? Most of those stocks I named, I think, are pretty good, okay? And then people ask me, should I buy this? Should I buy that? And really what I should say, it depends. How long are you going to hold it for? When do you need the money? Because I had this conversation with a friend who wants to get into stocks. And this person wanted to put all her money into one stock, which I thought was pretty volatile, a lot of downside. Not what I would consider a stable, safer stock. And I said I recommended 5 blue chips to get started. And this was like a quick, casual conversation. And the mistake I made was not asking how long you're going to be in these for, because this person is looking to make a quick buck. So this person sees a few of these stocks down, like, what the hell's going on? Should I still hold them? Is there something wrong with them? I'm not happy. It wasn't like nasty or anything. It's just, but you could tell that this person is antsy. And I think really the issue is this person wants to be in and out of these very quickly. And I'm like, what's the point? Like, if I tell somebody to buy a blue chip oil stock or a bank stock and it's down, I personally I don't even look. I don't care. It's not important to me. I bought them for a reason, and over time, I expect we'll do very well. Maybe you'll collect a dividend. A dividend is not like the be all and end all of stock investing, but it's a nice thing to have. So, really, the answer is when you ask me what you should buy or if you want a recommendation from me, it depends what you're looking for. It depends what your time horizon is, and this is why I don't spew out stock recommendations on the live stream. How many times you see somebody on CNBC spew out a stock recommendation and it goes down right after or it goes up right after? And that's how they're judged. Oh, it's up. It must be good. Like if I tell somebody I like a stock and 2 weeks later, like, oh, that oil stock is down. What's wrong with it? I'm like, it's been 2 weeks. Come see me in like 3 years, 4 years, 5 years. What do you mean? What's wrong with it? Nothing's wrong with it. And you have to really know how people are judging the recommendation. I could have recommended Amazon years ago to you, and it would have gone from $30 to $10. And you'd say, that recommendation sucked. And then it went to like 3,000. And that's what people don't get. So we need to be more careful. And I think for myself, I have to do a better job in assessing that when I talk to people about stocks. It depends. Should I buy Tesla? I just have to say it depends. It depends. And if people, I just want to know, do you think it's going to be up or down in 6 months? It depends. I don't really have a call on a stock in 6 months. And I'm not really interested in making a call on a stock in 6 months. So I have to improve that about myself. And I'm pretty good about doing it that way also. I normally do that. I don't normally just don't spew off a couple of stocks, but every time I do it, I kick myself and say, why didn't I get the other information first? Because we want to move quickly. We want to talk quickly. We want to get some information and move with it. Problem with getting some information and moving with it is you're not getting enough information. You're not getting good information, the right information. If I recommend 10 stocks to you and a week later, they're all up. Would you think I'm really good at what I do? Would you think I'm lucky? Would you think it's just the market? Some people might think, wow, you're really good. And some people are like, it's the market went up. Of course the stocks went up. The one who said the latter is the smarter investor, by the way. That that's for sure. All right. So that's about all the time I have today, and you have. I thank you for watching. Listen, I do this every day. When you ask your questions, it certainly makes my day. Throw me in there where you're watching from, what platform you're watching from. Put your favorite emoji, and it helps with the engagement, helps spread the word of the show. We get around a little bit more that way. Your friends, your contacts on LinkedIn will see the show on Facebook, etc. So keep doing that. I really appreciate it. I will let you go. I'll be back tomorrow. I'm having a guest tomorrow to talk about residential real estate, and should be a good show. All right. I'll speak with you guys tomorrow. Thanks so much. Bye.